It is April 28th, and it's really early in the morning. It's 2 a.m. in the morning, and I'm not staying up. I'm actually waking up this early for a change. It's kind of weird now. This schedule has got me, my sleeping schedule is all messed up because I'm not really going to work. I'm unemployed, um, like many other people at the moment. So I really should be making two videos right now. One to warn you not to buy USO or OIL like I did, kind of bought a few options for it. Don't do it. I'll tell you why, and also review the account. I'll show you what's been going on, and I want to share lastly some of my favorite strategies to make money in the market. Okay, so I'm going to list four of those and how I operate and why it's four of them and not more or less. Okay, it could be more, but definitely not less. All right, so first, um, let's go in. First, the warning. Okay, so don't buy USO or OIL. Okay, these are exchange traded products that attempt to keep attempt to keep track of the price of oil. Right now, oil even went negative, as I mentioned a few videos ago, at one point on the futures market. But it's really not a price problem that exists; it's a storage problem. So there's a difference between the prices that you see on the exchange traded products and on the futures products. It's not the same, and the price of oil is disconnected from that. Okay, so the reason why oil is trading so low into the negative territory is because there's just no place to store it. But the way that the exchange traded products that you might buy on Robinhood or other exchange brokers, the way they work is they own portions of different duration contracts, usually mostly the front month contract for the futures. And so basically, those will get sold off because there's just no storage and people want to settle in cash. So they'll run negative. So even if the price is bouncing off of a very low, let's say zero, and it goes from 0 to 10, your USO or your OIL will actually go down because it's now being sold off because the futures are being sold off because of lack of storage. All right. So you're not going to make much money for quite some time on these things. And that's why I actually actually bought 5 calls for 2022, which is way, way in advance. And hopefully that the exchange traded product here, OIL, doesn't either A, go bankrupt or two, doesn't fall off too far and doesn't have too many reverse splits in order to make that ground uh, unsurmountable. Okay, I'm betting that it's gonna recover, but I only put like $50 on it because it's such a gamble. It's very, very difficult to try to figure that out. Okay, so that's the warning. So don't play the oil market. I mean, you can play it by buying oil companies. I think that would be probably better. So, I don't know, buy Shell or Exxon or something that you trust and you think it's not going to go bankrupt. Don't buy any frackers or anything like that. I wouldn't even buy Aramco or anything like that right now because, I mean, it's just it's so complex and political. Like I'm having a hard time untangling myself. I've been listening to some podcasts. I like listening to Macro Voices. It's a good one if you guys want to check that out. Um, I mean, some of the people that are on it, they get a little bit too technical and they're a little bit annoying sometimes the way they speak. But the information is great. Obviously, you can see that I'm not getting paid if I'm calling them annoying, but um, they definitely know what they're talking about, especially when it comes to mechanics of the market. So I would suggest listening to that. And you can get a lot of information there on how the oil market works. So, having said that, moving on now to the account. So here's my account. I'm sitting at 74,000, pretty much flat. And if you want to look at the week, this is what's been happening the last week, plus 7.25%, which I think is beating the market, which I'm very, very excited about. You know how excited I get when I beat the market, right? So 7.25%. Let's check out SPY and see how the S&P 500 did, or at least the ETF that tracks it. 4.16. So I'm definitely beating the market, almost double what the market's done in the last week. Very excited about that. And most of it is due to, option selling. I counted how many options I have sold here. I actually have 41 options being sold right now and running. And if you average it out, if you say, let's say $1 or $2, let's say $2 per each option per day, or $1, right? $1 to be super conservative. That's $41 coming into my pocket every single day because of these options, all right? Regardless of where the price moves. I am tied to the underlying asset, so if the assets go down, they go down, but I'll go down less than everybody else, right? And if the assets go up, fair enough, I'm going to end up selling a lot of these positions, but I still get to collect that premium. So that's pretty fantastic. If you want to look at the positions that I own, you can pause at any time. You can see the symbol here, what type of contract it is, the date of expiration, and how many contracts I have or have sold. And same thing with my positions, my stock positions here, or my ETFs. You can see this one's fractional because I have fraction shares now enabled on Robinhood, and I've started to reinvest O, which is one of the only things that I plan on keeping forever and accumulating. And remember that because I'm going to get into the strategy section in a little bit. So O, you can see some appreciation, some depreciation, some of these assets. Wheat and precious metals down 74. I think the uranium sector keeps going up. Let me see here. It's pretty steady today, but I have a lot of options sold on Cameco. So if it stays around $10, I'm going to be making like $1,500 worth in a few months. Okay, so that's the account here. You can see they stopped OIL from trading because I think they're going to do a reverse split. So that's that. If you want to see the account and what portion of it is leveraged up at the moment, you can see my margin ratio is now down to 17%. Only $15.5 thousand dollars is worth its margin used at the moment. You can see the split right here. So I'm pretty happy about that. These numbers are pretty insignificant here. You can see the depreciation and appreciation of holdings, but it doesn't take into account profit and loss that I've had from selling and buying, over the months, which I'm pretty active. So doesn't really mean much here. Okay, so that's the account. And lastly, I want to share with you 4 strategies because someone in the comments asked me to share some of the main things I use to make money in the markets. And here they are. All right. One is my favorite, which is option selling. I sell a lot of options, as you can see over here. All these option sells. Look, this one just gave me $100 worth of liability erasure, which means basically $100 in my pocket, more or less, subject to change. Okay, so I'm selling puts against O because I'm trying to accumulate that asset. So I sell a lot of puts and a lot of calls. You can see all these calls that are being sold. I've sold 10 calls just for energy fuels alone at $2.50. So I sell a lot of calls. It's a great way to supplement the other ways of accumulating assets. Of income. So number 2 is asset accumulation, and it's kind of interwoven with selling options because if I sell a put, if it does trigger, if the contract executes, I get that stock or I get that ETF or whatever I'm selling a put against. I get to collect it, okay, at whatever price I determine at the scheduled date, okay. So I do accumulate asset, and sometimes I'll sell a call against them, sometimes I won't. Like for realty income, I'm probably not going to sell many calls against them because I'm trying to accumulate that asset. So I might just sell puts. Unless it gets really overvalued, then I might sell a call, and that's how it works. So I try to accumulate assets as much as I can. And my third way is dividend collection. That really doesn't come into the equation too much. I mean, I collect a lot of dividends, but Let's see where I can find this on the website. Maybe history. Oh, it's really, I don't know why the website's so slow, but especially when I go to some of these tabs, like the history tab or whatever. But, I don't really factor the dividends in too much. I do look at them sometimes to try to figure out what the best time to buy or sell an asset is. You need to be aware of the ex-dividend date and whatnot. But the dividends usually pale in comparison to the amount of premium I get from the options. So, but I do take it into account sometimes where, okay, well, I don't know why it's not working. So I'm just gonna exit this page, try Robinhood again. So anyways, so getting paid through dividends is always nice, especially nowadays. If the dividends aren't cut, they look very juicy with the current valuations of some of these stocks. And then lastly, I do macro asset balance. So this one's a little bit more complicated. So what does macro asset balance mean? Well, I try to run the account a little bit like a macro portfolio manager would. So what does that mean? Well, let's say for example that um, you have exposure to a certain amount of countries or regions and currencies, and you want to and you have an idea of what you think might happen next, and you want to shift that around. So for example, let's say you have too much exposure on Canadian, miners or Australian miners and, raw material producers, and you think that there's going to be a change there. You think the currency is going to go down, or the miners are going to suffer, and so you would want to reduce your exposure to that kind of those types of sectors, and increase exposure in something else, maybe like U.S. Consumer, or whatever, the U.S. dollar, or the Chinese production, or whatever it is, right? So you want to buy assets that are influenced in different ways by different macroeconomic events. So let's take a look at the account and see. I don't talk about this too much, but it's very diversified, and I change that allocation of different type of asset pretty regularly. So for example, I have a lot of exposure on US over here, Apple technology. I have exposure over here to business financing in the US. I have exposure to commercial real estate through realty income, more commercial real estate, this New York mortgage trust, so more housing. I have exposure to Russia. This RSX is just ETF that tracks the Russian market. So the Russian market is very oil based. Okay, so it's got a lot of exposure to oil. So I have some exposure to oil there, right? So now I have exposure to Southeast Asia through this little ETF over here. I have exposure to the metals through Wheaton Precious Metals. It's a streamer, right? So precious metals, NEM, I have in a different account, not really too much here. I have the exposure to silver miners, SIL. I have exposure to uranium, so a lot of raw materials there. Okay, I have exposure to emerging market dividend stocks. That's the fund that tracks that. I have exposure to natural gas. I have exposure to financials, Visa, right? I have some speculative bets here with um, Norwegian cruise liners. Okay, I have exposure to Rio Tinto, which is they mine all kinds of different stuff, resources. Again, I have exposure to shipping containers, right? I have exposure to entertainment, Disney, America. I have exposure to healthcare, um, REIT, real estate investment trust, right? Um, I have exposure to the airlines through LUV, or maybe it's another speculative play, rebound, and I have exposure to the UK. Okay, so some Europe. So as you can see, it's like very well balanced, worldwide, globally, and across many different sectors. So if one sector goes down, chances are another sector is going to pick up the funding. I used to be exposed to things like India as well, more China, etc. But the emerging market fund encompasses some of that. So it's correlated roughly to Brazil, China, Russia, etc., India. So that's what macro management is basically, and macro asset balance, if you want to call it that. So here are the four main strategies that I plan on making money from and increase the valuation of my assets. So hopefully you found that useful. Today, I think if you managed to sit through the whole video, like congratulations. Let me know if you're one of those people by typing in the comments 4 ways. All right, that's it for now. Peace out. Catch you probably on Thursday.